What's up you guys? Welcome back to the Average Joe Investor channel. I've got a quick video here for you on a Saturday. I don't normally do this, but I had an issue pop up on my Friday video where I made a small eensy beensy tiny error in my calculation, which resulted in a significant change in the actual results. So this video is gonna be really quick. Make sure to stick around all the way to the end because you're gonna be really excited about the news. Run that intro. Hey guys, Joe here. If you are new to the channel, make sure to hit that subscribe button below the video to make sure you don't miss any of my future videos. Make sure to leave a comment below saying you subscribed, and I promise to personally respond to your comment. All right guys, let's go ahead and jump right into the content here. Again, I had a small issue pop up on my Friday video with dividend stocks and the FIRE movement, but it was a significant issue because of the fact that the monthly contributions were being taken divided by 12 again, so it was really reducing the results. And I gotta be honest, I was thinking that it was not quite as a wow factor as I was expecting, but the truth is the numbers are really great. So let's go ahead and jump right into it right now. Same setup, just the small difference in the results here. I'll just, for full transparency, I'll show you here, like for each one of these holdings, but what's happening is the monthly contribution right here, I was taking this, the actual monthly, and I was dividing it by 12 again instead of just taking it at face value as the monthly contribution. So small issue here, but significant results here. So what I'm gonna do, we're gonna go over to the dashboard. We're gonna start with 100% of the Average Joe dividend portfolio. I'll give you a few different looks of what the differences are, and then I've got a surprise for you at the end of the video. All right, let's assume here $75,000 of annual income. You're gonna invest 30% of it, which means that every month you'll invest $1,875. The desired monthly cash flow is going to be living off of 70% of this amount, right? Because we're investing 30%, we want to live off of 70%. So that is $4,375 a month. We're going to assume no other investments, starting balance $0. And today is May of 2021. So all we need to do is put in the desired FIRE date. When do we want to be financially independent and retire early? Let's go ahead and throw in there 15 years. Go May of 2036. So then the question becomes, did we, based on these assumptions here, become financially independent in that time frame? The answer is no. And the numbers though we're pretty close though. 15 years, investing $1,875 a month, we'd have a portfolio exceeding $1 million as the total balance, and our monthly cash flow would be $4,124. In fact, if we just move this to June of 2036, I bet you we'd have our result here. Oh, not quite. Let's go to December of 2036, and there we go. We are exceeding our number here. So just essentially 15 years later, we've got financial independence here. Let's go ahead and mix it up here with a new look. Instead of 100% of the Average Joe dividend portfolio, we'll pop over here, we'll get rid of that. We'll go 50% Schwab. Actually, we'll go 75% Schwab, and we'll go 25% QYLD. Okay? That's 100%. Let's go back over here. Same results here. We'd have $1.1 million and we'd have $5,256. We would be meeting our goal even faster. Let's bring this back down to May of 2036. Still meeting our goal. Let's go back to January 2036, still meeting our goal. Quick reminder here, we're starting with $0 as our starting balance. We don't have any existing investments here, and we're just talking about being very intentional with our monthly investments for a period of 15 years, living off of 70% of our assets. Let's switch it up here though. Let's say you did have a starting balance. Let's say you did have, we'll go $25,000 here. Notice how that makes a big difference here. We have $6,000 and we only need $43.75, so we can bring this down to, we'll say, May of 2034. No, not quite. We'll go December 2034. That should solve it for us here. Yeah, essentially the same thing here. We've got $43.75 versus $43.45. Remember, when we're working with dividend stocks here, we don't have to sell our investments. We can live off the dividends and our capital balance will continue to grow. And with dividend stocks, if you're picking dividend stocks that have a growth rate involved, that dividend is gonna grow as well. Let's say you've got a 2-income household and we've got annual income of $120,000, which I think is pretty reasonable. You've got a percentage of income invested. Let's say you can live off of 60% of that, okay? Which means you can invest 40% or $4,000 every single month. And let's say you want to be able to live off that same 60% of $120,000, which would be $6,000 a month. And you've got a starting investment balance of, let's make it $50,000. And today is May of 2021. What would be our desired FIRE date here? Let's make it 15 years, May of 2036 here. So check this out, guys. I mean, based on this 15 years here, your goal is to have $6,000. You would have $11,757 a month in monthly cash flow. total balance of the portfolio would be $2.54 million, which means we can retire even sooner. Let's make this May of 2034. Yep, can do that. How about May of 2032? Not quite. We'll go December of 2032. Absolutely here. So we're talking about 11 years of being intentional with our assets here. If we're intentional with our assets for just those 10 years, right? And we're not living off of nothing here. We're still living off of 60% of our income. We can achieve a result here where we can stop working and do work that we're passionate about, or just, not work at all. Whatever you want to do, point is, you can do. Let's say we put 100% of our assets here into the Global X NASDAQ 100 covered call, QYLD, which I know is a controversial thing to do these days, which is why we're gonna come out with a video on that next week. We're gonna deep dive QYLD and just understand what it works, how it works, what the fundamentals are, and whether or not it's a reasonable investment for your portfolio. Let's say we're putting 100% in the portfolio and we'd like to retire based on all of these same metrics here. Let's say we want to do it in 10 years. Can we do it in 10 years? Absolutely we can. And you'll notice here, if you still got a portfolio of 1.07 million, which means we could do it in less than 10 years. We could do it, let's say May of 2029. Yep, we can still do it. May of 2028. Can still do it here. You can see your January 2028 maybe? Not quite. So we'll say March. Not quite, we'll go April. There it is here. So we're talking here exactly 7 years of being intentional with our assets. With a balance of only $616,000, we have monthly cash flow of $6,043, based on, of course, QYLD's historical growth rate and historical price appreciation, which is actually a loss. We actually have a principal balance that's going down, except for the fact that we're reinvesting our dividends for those 7 years. So there's lots of different combinations we can do in the portfolio here, and as a gift to you guys, because of what happened with the snafu with the previous video, you want a copy of this specific spreadsheet here, make sure to send me a quick email to averagejoeonmoney@gmail.com. I will reply back and send you a copy of this specific spreadsheet so you can look at the numbers, you can audit my work, you can see the different combinations that your own assets are and play around with what your fire date would be based on your unique circumstances. That's all I got for you guys in this video. Make sure to leave your 2 cents in the comments below. Thank you so much for being patient with me for this video and just knowing that every once in a while I do make mistakes as well, so thank you for giving me a little bit of grace on that. Next week, again, we've got a video coming out regarding QYLD. We're gonna deep dive that. So if you haven't done it yet, hit that subscribe button and to make sure you don't miss any of the future videos. That's all I got for you guys. Have a great rest of your day. Have a great weekend, and please continue to stay healthy, both physically and financially. Have a good one.